Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we will look at some other expenses that a business owner might incur when renting a property for business use. When a business leases a property and has to pay taxes on the property, the taxes are deductible as a business expense. If the cash method of accounting is used, only taxes paid during the year are deductible during that year. If the accrual method of accounting is used, taxes on leased property may be deducted as long as all three of the following conditions set by the IRS are met. First, the business must have a liability for the taxes. The business must also be able to determine how much the tax liability is. And third, an economic event must have occurred. In other words, the business owner must have actually paid the taxes. Sometimes a business may have to pay certain fees and incur certain expenses in order to acquire a lease. These costs of getting a lease are deductible business expenses. However, they must be amortized over the course of the lease. Often, expenses such as these come from either renewing a lease or from modifying an existing lease due to changes in the business. If a business is subject to the uniform capitalization rules, certain rental expenses must be capitalized. The uniform capitalization rules state that if a business produces property or acquires property for resale, the direct and indirect costs associated with the business must be capitalized instead of deducted. The business can recover these costs through depreciation, amortization, or through costs of goods sold. If a business is subject to these rules, then rental expenses also must be capitalized.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.